You are being lied to. Most indicators today aren't truths anymore. I'm the anti-trader, and now we are burning down the Holy Grail myth. Honestly, indicators are the amateur hour of the trading world. But look, I get it. I started there too. I spent way too much time hunting for that Holy Grail indicator and even more trying to invent my own. Actually, later I'm going to give you access to a nice indicator that might actually be useful, but let's not get ahead of ourselves. Every indicator is a derivative of price. It's just a mathematical way of smoothing out movement. Essentially, it's a normalization of price action, but because it's pulled out of the context of the entire chart, it actually robs you of information. We often think indicators give us extra data, but it's the exact opposite. For example, an experienced trader doesn't need an oscillator to see overbought or oversold areas. You can see the exhaustion of buyers and sellers right there on the price chart. But for that to mean anything, it must be connected to the rest of the context. The experts love to give you the sentence that indicators are lagging. While that's a cliche, the truth is that the entire chart with its printed candles is technically lagging from some point of view. What matters is that an indicator needs a candle to close to give you a signal. Meanwhile, reactions at key levels are visible while the candle is still printing. Ironically though, the most critical price action often happens in the final seconds of a candle's life, making the close the most important metric. But the most dangerous thing about indicators is the mindset they create. Looking for easy, visible buy-sell signals means you have no desire to actually understand the market. And if you don't understand the market, you are guaranteed to lose the war against it. Indicators strip away context and turn you into liquidity bait. The market is inherently chaotic. However, that chaos exists within a dynamic framework of seeking liquidity and the constant battle between massive institutional players. An indicator is a static model trying to visualize isolated information. Back in the last century, they might have worked as a rough visualization of certain parameters, but today's market is a high-speed battlefield dominated by institutional algorithms. Some of these algorithms are specifically designed to trap retail traders, and guess what? Some of them use popular indicator levels to do it. Banks love your stop losses and liquidation levels. They use them as fuel for their own orders in the opposite directions. To be completely blunt, if you are here and this topic still fascinates you, you're probably not ready to trade yet. Anyone can win a few trades, but consistent profit is a different beast entirely. There are no magic formulas. A successful trader is someone who understands why price action is doing what it's doing at any given moment. That's what technical analysis should be for, but indicators honestly have nothing to do with it. They worked 50 years ago because the market was lazy and boring. Today, completely different story. My personal advice, if someone tries to sell you a miracle indicator, ignore them. Which is exactly what I'm about to do now. Just kidding. I'm not promising miracles and I'm not selling. One of the few things indicators are actually good for is showing divergence, the disconnect between price extremes on the chart and the normalized extremes of the indicator. Before years I spent a lot of time researching this, and I built a tool in TradingView that functions as both an indicator and strategy, not for trading, for testing. A quick side note, don't trust TradingView backtesting data blindly. I'll explain why it's misleading in another video. So, this is a private indicator and I'm sharing it with you. What's inside? Hidden and regular divergence options for 18 different indicators. Customizable look back and look forward settings. You need the look forward. The secret sauce. You can set minimum deviation levels for both price and the indicator. Some filters including different time frame, days and hours of the week, and various exit strategies. It's a lot to take in, so you'll need to read the description and play around with it. I'll try to put a link in my description here and also post it in the comments. Don't rely on this indicator alone. It's not for absolute beginners. It works best with combined with key levels, but not the support and resistance levels you are thinking of. Those are not the most important levels. I'll be making a video about those real key levels very soon, so subscribe to the channel and I'll see you in the next one.